Time to get to the bond market moment. Trader Todd Colvin of MarkIV Brokerage has his eyes on the treasuries following the talk by Fed Chair Jay Powell on Tuesday. What can you tell us, Todd?
10-year note yields reacted to the Fed chair as he spoke. We saw yields move down to 4%. It's a level it hasn't spent a whole lot of time at. It hadn't traded there since mid-September. And it's only the sixth time it's actually breached the 4% level since going back to October. So we haven't spent a whole lot of time below 4%, but that's where the market sits as we speak. Ultimately, the Fed chair did talk about concerns about employment inflation, leaning a little bit more towards the inflation side of that equation, keeping two rate cuts well and alive on the table. The market is continuing to fully price 225 basis point rate cuts, one in October, one in December. The Fed chair did not dissuade that. He also talked about the funding markets and there being some pressure there, ultimately seeing a possibility of them backing off of their balance sheet runoff and ending their quantitative tightening. Now, the market could look into this and say, does that mean quantitative easing is right around the corner? Well, he did not talk about that. 10-year note yields lower, the Fed chair a bit dovish, and we'll have to wait and see when we can get some fresh data points into the market to help the Fed with its decision making.
Thank you for your bond market report.